seen a decent recovery come by in the markets, in the mid and the small cap especially. So a lot of investors have been asking us that now that we are seeing an uptick, is it safe to invest in a mid and small cap fund right now, especially after many of them seem to have burned their fingers, especially if they've started putting their money only 2 years ago. That was literally the beginning of the fall in mid and small cap funds. So to talk about that, to talk about the quantum of exposure one should have ideally in their portfolio towards mid and small cap funds, I have with me Feroze Azeez, Deputy CEO of Anand Rathi Private. Feroze, thank you for joining us on the Money Show. I think a bull run is always a lot of fun, especially for private wealth managers, for fund managers, for the markets, for business channels, everybody, right? But especially more so for the investors, because that's when they actually start seeing some meat in their investments. And the last 2 years have not been that great. So now that we slightly seeing those green shoots come by in the markets, would you say that perhaps all our viewers out there who perhaps were staying away from mid and small cap funds should give that a relook?
Yes, maybe. Before we progress on what should be the direction of your strategy for the next couple of years, it's very important to understand what do we learn from what we did.
Yeah.
As an investor, as an industry, what happens is people generally like to drive looking at the rear view mirror, which is never a good idea. You have to look forward. Most of them, investors, get very lured when the returns so stupendous. That is exactly when it might just be the time to quit that game and you're entering it at the fag end of the last lap of the rally. So it's important to look at valuations before you invest rather than performance. So this mindset change is dramatic mindset change, which is the need of the hour. That's the learning I would take away from the last 2 years. And because last 2 years back, when the performance was very good, the inflows were stupendous.
Yeah.
And there came the negative zone. So a lot of people lost money. Lesser people made money. More lost money. So it's not even. So coming back now, should somebody look at mid cap and small cap? So let me address them both individually, because they are generally combined when in any conversation, mid and small cap.
Yeah.
But they're distinctly different universes with very, very diverse risk return profiles. Midcap earlier didn't have a definition. Today, by the regulator, there's a definition that the top 100 companies are large cap, the subsequent 150 are mid cap, and all the rest of them, which could be about 5,000 odd, are small cap categories. So the largest category in terms of number is the small cap category. So I would say mid cap is definitely something where the value has emerged. Okay, and how to measure that value probably in the subsequent portion of the discussion we'll discuss. Point one I'm making is mid-cap, definitely, Mubina, I subscribe to what you just said. Increasing some degree of mid-cap allocation today is a good idea. Of course, performance will not merit that, but valuations certainly would. Coming to small cap, I would still say no to small cap. Because of the regulatory changes, the institutional money is not going into small cap stocks. Since there is nobody buying it, that's why the prices are not coming back to the valuation levels they deserve. Because the 8,000 crore systematic investment plan money which comes in to mutual funds, almost 80-90% goes towards large cap and mid cap. Small caps have been left behind because there's no mutual fund wanting to buy those stocks. So I would definitely not be party to things where there's no institutional buying. So research has reduced, institutional buying has reduced, price discovery has reduced. So small cap is something which I'll keep out of and buy a mid cap fund which might have certain degree of small cap, not the 5,000th stock, but it will have still the 300th or the 400th stock in terms of size.
Okay. But this was, I think, as per the recategorization norms that had come about a couple of years ago, which a lot of fund managers, by the way, complain about as well. Okay, so Feroze, you mentioned that maybe now is the time to perhaps slightly increase your exposure to a mid-cap fund, not necessarily to one of those small-cap funds. But in a portfolio of funds which comprise large cap, multi-cap, mid-cap, small cap, how should it be allocated? How much to large cap, how much to mid-cap, how much to small cap?
See, that's a question which is a very, very common question or a common dilemma, because once you decide out of my 100 rupees, hypothetically 50 rupees goes into equity, the next big decision is what portion of equity will this 50 rupees enter and what proportions. So large cap, general conventional thought process says put a larger share in large cap and put a smaller share in mid cap. But you can't keep that static for years. And that's been the conventional wisdom says 10 years you always keep it like that, but that needs to be dynamically managed. So in the current situation, I would still not mind going 40% into mid caps and 60% into large caps. in the current circumstance. But how does one allocate it? It should be allocated on something called the P ratio, the price I pay to the earnings I get. That's why it's called P divided by E. The price I pay, let's assume I pay 1,000 rupees for a share, and the share is earning 50 rupees every year. The P ratio is 1,000 divided by 50, which is 20, which also means that it will take the company 20 years to recover your principal. So P ratio is a good measure to understand which portion of the market you should be in.
Okay.
So mid-cap Ps are ideally 5 more than the large cap.
caps.
But if the gap widens, favoring the mid-cap, exit mid-cap. So today the gap is only 3, which is a very good gap.
Okay.
If the gap is 20, which is what it was 1 year back, the gap was 20 and people were still buying mid-caps, which was not a good idea. Now the gap is just 3. So that's why I substantiate my point of adding mid-caps by this valuation difference being in a fair zone, unlike 1 year back.
And this is a very simple guide, you know, I mean, it's something that's perusable as well by all. By the way, you can find out a P in the fact sheets of, you know, the mutual funds that you all invest in, easily available on the website as well. So it's a very simple guide, something that's understandable by all, no significant mathematics as such required for this one. Now, Feroze, the other point is with respect to risk. Obviously, because we know the way small cap and mid cap funds have underperformed to a larger degree as opposed to large caps because of the turmoil in the market, it does obviously mean that these funds are a little more riskier than your large cap fund. So to what extent would you, you know, sort of attribute that risk element to these funds, and you know, it may not be, you know, sort of suitable as well for a lot of investors out there?
Yes, I think now that we are on the topic of risk, unfortunately the risk understanding with investors is very low, because everybody wants to use English words for risk. Low, medium, high. That's not the right representation. There are mathematical expressions of risk. So Mubina, the most commonly used and commonly available or easily available risk measure is something called standard deviation. So the standard deviation helps you ascertain the kind of swing in the performance possible of a specific fund. So to keep, for the lack of time, let me say standard deviation is a good measure of risk, and the standard deviation of large cap funds is in the range of 12 to 14. Mid-cap funds is in the range of 15 to 17. Small cap funds can range between 17 and 20. So if you ask me this pointed question, how riskier are they vis-a-vis large cap, I'll say 30-40% more riskier than large caps is what a small cap fund would be. So which implies that the swing in the performance could be 30-40% more than it would be in the large cap. So if you are somebody who's entering into the investment arena today, should you start with a small cap fund? Should definitely not do that. Start with a large cap fund, dip your feet in the water, understand what kind of volatilities it has, and then naturally progress into something which can be more riskier.